Market Michael here, back with some information. It is April 29th, about 9 o'clock. What we're looking at are the futures. Well, I gotta put up the futures here. But then we're gonna look at the rest of the markets. Okay, guys. We'll do this. Do 10 minute, 30 minute, and an hour. Okay. We'll examine the 30-minute first. So, okay. Friday, let's kind of recap what happened actually. So let's pull up a daily. Okay. Friday. Okay. I'm pretty sure this is Thursday. Friday we had a humongous blast up, right? No, we didn't. I'm lying. Okay. Friday. Okay. Thursday we had a humongous blast up. But Friday we opened higher and then closed lower. So this is Friday, guys. We opened higher, a little bit higher, but then closed lower. So what this is telling me on a daily is that, well, number one, we had to bounce off this critical 38%, which is normal. But we didn't really continue to move up. You know, we shouldn't have declined as much as we did. Although we didn't really go lower, we didn't go, we didn't back above this 61%. And right now, as of right now, we're below the 61% fib. So what's that telling me? It's telling me we can't hold above the 61%. What do I think's going to happen? I think we're going to go ahead, test the levels of critical support, guys. We're going to go ahead, test again. Well, really, the S&P, I don't think we're going anywhere. I think this is just stuck on the support line, this 38% support. I think it's just stuck. Dow Jones, it's trying. They're so close to this 38, and the comp is so close, but so far from that 60%, guys. You see, so close. But what's likely to happen is we'll get somewhere close to there, but I don't think we'll do it. We'll fail it, come back down, and we'll absolutely slap right through the support, guys. Slap right through the support and have an awful day. That's what I'm seeing. I mean, this is going to change. This is going to drop negative. We're flatlined for a weekly chart. And again, let's see a 4-hour. Let's look at the indicators. The indicators say we're at the top, guys. Even though we've kind of slithered our way to get, it looks like we're possibly going to continue up and go up, but it's not likely. You got to look at the candles, guys. Look at the candles. What's going on? What's going on? It doesn't look good. Now, I'm going to just pull up the comp here because I want to show you this head and shoulders. Okay, ready? Shoulder, head, shoulder. That's your head and shoulders, folks. And we're going down. You see? You see? Look at this. We're going down. That's the direction, is down. Now, I think that this head and shoulders is a clear sign that it's a clear red flag. It's a clear skeleton with those crossbones. That's what this is telling me. I don't think it's going to be good for tomorrow. We had a humongous day of selling. Look at that. Boom. It all happened in the first, I don't know, hour, 2 hours of trading. But I don't know. We were weaker than expected, so we're going to pull back. And I think everyone's starting to realize now that this bull market's going to end sooner than later. Everyone sees it. You know why? Economic growth is slowing. It's inching to a halt. First of all, we never really even had economic growth. They're just saying the economy's expanding. Why is the economy expanding? Because they're dumping liquidity into markets. Why are they doing such a thing? To get growth. Now, That liquidity is drying up right now. The Fed is tightening at the end of a expansion. So what's that going to mean? That means they're raising rates too quickly for the time frame right now. What's that mean? That means they're going to prick the bubble. That means we're going to create a liquidity crisis. That means the derivative markets are going to fail. Why are derivative markets going to fail? Because businesses are going to go out of business. Why are businesses going to go out of business? Because consumers aren't spending. Consumer spending is decreasing. 70% of U.S. GDP is consumer spending. So it's a chain reaction in markets, and it's going to be a chain reaction of what's going on. Someone said on YouTube that this is different from the housing crisis. You know, it's absolutely not different from the housing crisis. This is essentially bigger than the housing crisis. This is all markets, you know, debt markets. Every single debt market you can think of is financed by the banks. Predatory loans are still out there. They're still doing things sketchy. So all these, the futures are telling me that okay, we've peaked out and we're coming down. This 30-minute, look at that. Let's let's look at some other regions of the market. Actually, before we do that, let's just go ahead and look at the indices. What are the indices saying, guys? Okay, let's go to the comp because I love the comp. Okay, this is a nice green candle up, but guess what, guys? We failed this 50-day moving average breakout, and we're back down. We're back down. I forget. I don't know how many points we're back down. But as soon as we went up, we're going back down. Look at how weak this is, guys. We're at the middle of the road for the RSI. CCI is looks like it's spiked out. It's ready to come down. We're gonna have that come down, guys. I'm telling you. I'm telling you, guys. This is a CCI, RSI, MACD. This MACD's flat. I haven't seen this MACD flat, I don't think, ever. Right here it was flat, but we had a drop negative and a bounce back up. But right now it's different. Right now we're under the 0 percentile for that MACD. And what does that mean? That means we're in a bear market. That means we can't look at, see, this is bull. This is all bull market. You see how we're up? You see how we're up? Look how we're down. You see how this is kind of sideways? Well, we thought we were in a bull market. We got higher highs, but we're down. Now, what's going to happen, like I said, is we're going to go ahead and test that 200-day moving average. That's a big drop, guys. That's like 300-something points. That's like close to 350 points of a drop. That's fucking huge. I don't know if we're going to get that all in one shot. I don't know if we're going to get... I don't know what the deal is. It could take a week, could take whatever. We could go on a bull run and fucking not even... We could explode through that 50-day. I don't know. You can't... You don't have a crystal ball in markets, but all I know is we failed after hours this 50-day moving average. Absolutely crazy. Oh no, this was a negative candle. Excuse me. Excuse me. I don't know why it's green. I don't know why it's green. Oh, it's this stupid thing. It's sorry, this was a red candle. Excuse me, guys. I'm thinking it's green. I have a yellow tint on my computer screen. I don't know if you guys could tell. But I have a yellow tint to kind of, you're supposed to wear yellow glasses to block out the blue light. So I got this app called Flux something. It's just called Flux. And, it warm all the time. That's what I like. I like it kind of yellow tint so it doesn't hurt my eyes as much. It's really good and you guys should check it out. But the point is, we failed this. Check out S&P. Looks even worse. We didn't even get close to it. This is a transition candle to go back down. This is an absolute bear candle to go back down. And look at this Dow Jones here. Didn't even come close. So we're all very close to the 200-day moving average, which is 23,702 for the Dow. For the S&P, it's 2,611. And for the comp, it's 6,832. I'm expecting this week to all hit those numbers. Now, I've absolutely called it to a T with this top here, but when it comes to this bounce, it's not that I fucked up, it's just that I didn't see it coming. I was blindsided by my own beliefs. I thought this market was going down, down, down. especially with parabolic star balls on top, especially with everything in the news. But guess what? We went up, up, up. But now we're going to go back, 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 down, 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 down. This is what the charts are telling me, guys. And on top of that, we have been experiencing negative, very negative things in the economy. What do I mean by that, Michael? I mean Europe's slowing. ECB didn't raise rates and they're more dovish. They're using the PPP policy, and that is not PP as in penis. That's PP as in I don't know, but it's dovish, and that's all I know. We, on the other hand, are keep tightening, 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 and we're tightening for the wrong reasons. They say we're tightening for the right reasons. They say bond yields are rising because the economy's strong. That's absolutely not the case. The economy's weak, and it's weaker than expected. Everyone is saying the economy's expanding. Well, it's expanding sluggishly to the point where it's contracting. You see here, Ford Motors is reducing the car lineup to pickups and the Mustang and SUVs. What's that tell you? That tells you no one's buying cars. We're going to get that vehicle sales number this week. I don't know what day, but we're going to get that. We see Starbucks having trouble. We see Subway closing stores. Of course, retailers are having trouble. That's no new news. This isn't new news, guys. So if you fucking have your eyes open and actually look at what's going on in the economy and don't just listen to these confederacy of dunces on Bloomberg, CNBC, or whatever the hell it is, then, you could see the world for what it is. Now, I think I'm just going to have to wrap it up here. Oh, I'm not going to wrap it up. We're just going to quickly go over what's going on in the markets right now. So take a look at gold on a 4-hour chart. We are still hot and steady. We're curling down, though. That's not really an absolute good sign. Perhaps I think we're going to fail this, but then I think we're just going to double bottom and get support at this 23. Perhaps we can go lower. I'm not really sure. If we go lower to this, we will definitely have support at this 1300. I'll tell you, this bottom. Well, we can't really trust that. I hate the trend lines for this Thinkorswim program. Let's just put it on a daily. We could really see we're at the bottom here, and looks like we're crawling up. So this right here isn't really the biggest positive sign, but I think somewhere today we're gonna pop through that resistance. If not today, well, not today, but Monday's trading day, we're gonna be able to look. See, we're already down here on the CCI, and that means we're gonna pass this 38. So we're gonna have an explosion with gold here. Not an explosion, just a pass through the 38, which is an incredibly great sign. And that's a great sign for the bears, because you look at gold as a fear factor. So what do we see for silver here? Silver is just in a fucking range, and there's nothing you could do about it, guys. Let's look at a weekly chart. Again, look here. We're absolutely flat. I don't know. I think we're just going to stay between 16 and 17 until we get that major breakout. Regardless of this pennant, we're in this longer term channel. So, the fact that we didn't break out here, it's not really a problem. I suspect we're just going to continue this uptrend between $16 and $19. So, I think this trend line won't mean shit, and the fact that we're not breaking out, it won't mean that we're going to fail it and go negative. Now let's go ahead and check the dollar. So the dollar has been probably the trade of this here. It's been the trade of a long time. We see the dollar here kind of getting some support, should I say, at this point. But what do I see? I see on a daily chart we're at the top of this resistance, and look at this candle. That's clearly indicating the top, and it looks like we're coming down. On an hour chart, it's showing we can go back up. Let's see what this can do tomorrow, guys, in the rest of pre-market. It could go either way. but the fact that we had this major decline after a powerhouse of steady increases could be a potential sign that this dollar rally is starting to fade away, and especially on that daily chart where we're weakening. You know, we've hit this 92%, $92 resistance, which is pretty strong. Hello, hello, hello. Great. Okay, let's pop up Bitcoin. Sorry about that, everybody. I promise this video won't be too long. Look at on this hour chart, we're starting to enter this negative MACD trend. This is not a good sign for Bitcoiners. This is a bull trap like I thought it would be. On a daily chart, it's even more clear. Look, you see that fading MACD. This is going to go back, possibly this 8,000 mark, possibly retest this double bottom at 6,000. Who knows, but we're definitely probably not going to break out here. Definitely not probably. Pick one, Mike. I'd say we're not going to break out here. I'd say we're going to retrace our steps back downwards. But you never know. This could get short squeezed or whatever the case is. People just could want to buy it as a risky asset. You know, I wouldn't really trust Bitcoin no matter what. It's definitely not trustworthy. Anything else I could mention? Oh, 10-year. Let's look at that son of a gun. And let's also pop up the good old 10-year minus the 2-year 10-year T, 10-year Y, 2-year Fred. Okay, great. That's what we want to see. And on a weekly chart, this is indicating the top. We just started the fun, guys. We just started the fun. We're going to fail it. Look at this. I think this is just going to ride along the bottom. I think we have no hope here. Look at on a daily chart. Look at what's going on. You see here we had this run up and we're starting to come down. You see the weakening in strength? I suspect that that's going to continue and that's going to be an ongoing trend. We're going to blow through this simple moving average. We're going to enter this 0.4 region and make new lows, go into the 0.3s. This is just going to continue and go where and we're going to get that. We're going to go down, guys. We're going to go to that negative region. The curve is inverting. A recession is imminent. Be wary, everybody. Don't be stupid. Set stop losses, set trailing stops, set alerts. Make sure you guys are actively managing your portfolio, or make sure your portfolio manager is actively managing your portfolio. With all this being said, thank you very much. I hope you enjoyed this Sunday version of Market Michael. And enjoy the rest of this day. You know, watch some videos, relax, enjoy, lay down, rest, because we got a big, long week ahead of us. And again, if you didn't see my other video going over the economic calendar, I wanted to mention that Tuesday, May 1st, I was going to be out of the office and I was only going to be able to make videos in the morning before, 9:30. So I'll get some videos out before 9:30, but after 9:30, I'm going to be away from office till the end of the day. And I should be able to get a video in perhaps towards the end of the day, like maybe at 5:30, 6 o'clock, I don't know. Oh, okay, let's look at this 10-year. So this 10-year is coming down, guys. I have a funny feeling, though, that we might end up getting some support and continuing this run up. I suspect we're just going to continue a run up. Let's look. Yeah. Ooh, this is really high. We've spiked out really hard. I don't know, guys. You know, I think because this is just such a panic thing going on. Look at this monthly chart. You know, I think we're going to come back down and just stay. We're going to be overbought on a monthly chart for the first time since 2000. Not since, but since before 2000. So this is pretty astonishing. This 10-year was at 68. You could get a $68 yield. Oh no, sorry, a 6.8% yield in '01. So perhaps we're going to get to 4.5%. I think that's probably where the 10 year is going to be during this recession, because there's going to be that much bond selling. The debt is going to be much more risky. When it's more risky, there's a greater reward. So again, thank you very much, guys. Please like and subscribe, and I'll see you tomorrow morning bright and early.